The stock market is a device for transferring money from the impatient to the patient. Warren Buffett said that, and that is another market truism. We must be patient. And what helps us in being patient is following the charts. And again, we are trend followers. We look for trends, and when we find them, no matter who is manipulating the market, I hear people all the time, well, everything's controlled by computers. Humans aren't going to be able to invest in the market in the future. Everything's going to be controlled. I would argue with you, I would first agree that yes, computers do control a lot of the trading. When things go bad in the market, you have the plunge protection team, you have all sorts of stuff, the Federal Reserve, all sorts of entities get involved. But I urge you to look at our charts day after day. You can see the weekly trends in these charts that we track, and you can see how accurate these weekly charts are over time and time again. People say, why do you chart the S&P 500, the NASDAQ 100, 20-year bonds, and gold? Because they are chartable. There are some charts that you cannot follow. They make no sense. Now, when we look at our charts time and time again, that weekly vertical crossover is what we call it, because every time there is a crossover on the price percent oscillator, our number one indicator, we put a gold line in there. That gold line represents money, and it shows you the direction that money is going. In gold, when we had that weekly vertical crossover occur back on the week ending the 29th of March, we said we have a weekly vertical crossover going down, short gold, or get out of gold. Now again, we're not a stock calling service, we're an education firm. Everything we talk about here is with the caveat that we want you to practice and do virtual trades. So our virtual short was in gold. Has it worked? Yes, it has. In fact, gold starting off that next week, somewhere in the neighborhood of about $123, something like that, down to a low of $119.54. And that is over the last 3.5 weeks at this point, 4 weeks at this point. So again, we can go back on our charts. We can talk about the Q's trade that we had over and over and over again. I just ask you to be patient. Impatient people lose money. Patient people who are willing to study and learn and follow these charts on a daily basis will get what it is we're doing. You will practice. You will get good at this. You can become a charting master. Now, to those who say, well, I'm a value investor. Well, so the hell am I. I want to find something that is valuable and I want to invest in it. The last thing I want to do, though, is buy something at an all-time high only to have it crash. I want to buy things at the right time. Buy them high, let them go higher. Buy them low, let them go high. Buy them, inverse trade them, or buy a put that is an option that makes money when things go down, when things are high and about to, and are in a downward process. So again, we practice day after day. I invite you to join us. If you're just joining us for the first time, listen to what we're doing. You'll start catching on. We don't complicate this. We don't sugarcoat it. We don't make it any more difficult than it is. We also have great training at the website, chartingwealth.com. Sign up for our daily market review. It's absolutely free. All the trainings there are absolutely free. If you want to buy a book from us, you can see the link in the show notes. Buy the book. That will give you the down and dirty. Let's jump into these charts. Everything is down for the day. Everything is down for the day as we go into the last day of the week. So on Thursday, everything was down. What do we see going on with the weekly chart? Now, one more day till it's complete. We can see that the price percent oscillator, it was going up at a steeper angle than it is this week. That has paired off some. Looks like we've reached a little bit higher high over the course of the week with both the candle itself and the wick on top on our Heikin Ashi candlesticks. We see that the derivative oscillators lost a little bit of steam. Now, as we go from the 2-day to from the weekly to the 2-day, we can see that, of course, The last candle that formed on Wednesday, fully formed, was a green up candle. But this latest candle, it's just the first day of the latest candle, just for Thursday. It will finish forming on Friday. It is a strong down candle so far. We've got a wick on the bottom, looks like just a tiny little wick on top, pushing through and ending below at this point. We're only halfway through the candle. We don't call a candle until it's done, but it ain't looking good. It's pushed through the 2-day trend line, actually penetrated on the wick on the bottom, the weekly trend line. So things hammering down as far as the average pace goes. Now again, that's what Heikin-Ashi candlesticks, that's what they show us, average pace. We also see that the price percent oscillators rotated over, going down on just the first day of this latest 2-day candle, and a huge drop in the derivative oscillator, the other indicator that we use. We look at the 4-hour chart. Of course, we had already had the charts move over in the afternoon on Wednesday, further down on Thursday in the morning, and we see a little more movement down in the afternoon. Derivative oscillator gaining downward momentum. Price percent oscillator spiking down, lost a little bit of that later. But again, pushing right up there to the weekly trend line. So, of course, we weren't in a trade in the S&P 500. Are we seeing things blow off steam, getting ready to start moving down for perhaps a low? Or is that not gonna happen till summertime, till we really get into the summertime trading zone? We'll see. We'll just wait and see. I mean, again, remember, we hear that tune, sell in May and go away, live to trade another day. What does that mean? A lot of the volume in the market leaves in the summertime. People go on vacation and they park their money, and things don't have it doesn't just have the amount of volume that it typically has, particularly during the fall winter trading zone. Is that what's happening? Well, we'll continue to watch and see what we see, how much volume starts leaving the market. And then remember, we're entering into the worst time for trading. Typically, summertime trading zone gets herky-jerky. It's the difference between going from the ocean to a pool of water. In the ocean, you can splash around all you want, but does it affect the other people around you that much? No, but if you start jumping in a pool and splashing, everybody's close to you because there's not a lot of volume in that pool. And yes, that you can splash them, you can knock the water out of the pool. A lot of movement can happen, and that's what happens when you have less volume in the market. So we'll keep our eye on things and see what we see. Let's go to the Qs. That's a NASDAQ 100. It now, when we start looking at where we are as far as price movement goes, we're right about where we were over the prior week. Derivative oscillators lost some energy. Price percent oscillators also lost energy. And as we go from the weekly to the 2-day, and again, Q's down 0.43%, we can see how this first day of the latest 2-day candle really just pushed right through the 2-day trend line. The wick on the bottom penetrated the weekly trend line, crossing over, going down. Now, if there's a big up day on Friday, if there is, it could pull the price percent oscillator back over, but not all that likely to happen. Derivative oscillator over the last 3 days has really lost a lot of energy, about half on Wednesday and then way down on Thursday. So we'll continue to wait and see how it plays out. We look at our 4-hour chart, and of course, we had reached highs somewhere in the 191 range, 191 plus, and of course hit a low over the course of the day of 187.05. So again, and also penetrating in the morning and the afternoon, the 2-day, and laying right there on the weekly like we saw on the S&P 500. So a lot of wind knocked out of the market. Where's it going to go? Don't know yet. But again, we had a good run of it, did we not? Starting at about 181 back on the afternoon of after the trigger fired in the morning on Monday, the 1st of April. We then had a jumping in point that afternoon, somewhere around the 181 mark or so, and of course hit a high of 191 something. So beautiful run up over the course of basically the month of April. Just beautiful. So again, that has been a wonderfully successful practice trade for us. Very happy and satisfied with that. And that goes all the way back. Remember, we had that weekly vertical crossover back at the end of January in the Qs. And it served us well all throughout this time period. Only had 2 weeks of pullback. So again, we'll continue to watch and see if things cross back over and the market gets a lot of up sentiment and that 4-hour chart crosses over and the 2-day chart doesn't, then we may still have a jumping in point. But the way it looks right now, that 2-day chart may very well be crossing over once the candle closes on Friday. Bonds down 0.48% for the day. Now we look at what the week looks like in bonds, trying to be an up week. It's a green spinning top, long wick on top, trying its best, though it looks like, to cross over going down. Again, if it's another down day on Friday for bonds, you may have that crossover make its way. The derivative oscillator has already gone negative on the weekly chart. It's real hard to see, but it looks like we might be heading toward a crossover. If so, those of you who signed up for our text alert service, we'll let you know over the weekend. If you live overseas, don't fret. We do talk about the weekly vertical crossovers over the weekend. We will let you know if that occurs in our comprehensive review and forecast that we put out every Friday at the close of the market. But if you live in the States, haven't signed up for our text service, it's absolutely free. You'll see a link in the show notes, and you simply text the number 33222. To that number, you text the word Charting Wealth, one word. You'll see the instructions in the show notes. Just follow those. And if you're not already signed up for our daily market review and our once-a-week comprehensive review and forecast, do that at the website. We also have a special training for you there that we put out over the last couple of days. You guys have really been enjoying it. It is a once-a-week time asking you to step back and look at the big picture. You'll like the training. It's available for everybody who subscribes. So subscribe at chartingwealth.com. You'll get it too. It'll be in your show notes. We send you one email a day. When the market's open, at the close of the market, you get the daily market review. And then on Fridays, over the weekend, the comprehensive review and forecast. So that's where we are on bonds. Now, almost lost my place there. We're going to gold on the weekly chart. And look at gold down 0.38%. Gold just keeps trundling down. Now, when we look, though, at the wicks on the bottom, we can see the body of the candle down. Wicks about the same place, so right around that 1960 mark or so. Derivative oscillator is gaining some downward momentum on the weekly chart so far. Price percent oscillator heading down. So that's good to see. Our weekly vertical crossover still heading down. Now, those of you who say, wait a minute, why would you want anything to go down? Because, my friends, if we can track it, we can trade it, and we can make money on it, okay? So there's always the ability to short any of the funds that we talk about. You can either buy an inverse fund or you can buy a put. And again, we've got some great training that's going to be coming out in the next month or so on options and how to trade options and give you some option strategies, simple strategies that work, that you don't get into to make pennies when it comes to your virtual trades, but to make dollars, lots of dollars. So again, virtual dollars, of course. We're not a stock trading calling service. We're an education firm. What do we see going on the 2-day chart? Well, of course, it hammered down the first day of this latest 2-day candle. That is good to see. We'll redraw the trend line once we have a candle that is completed. And again, you don't draw trend lines until candles are complete. But we have both the 2-day and the weekly. Of course, we had that weekly vertical crossover back on the week ending Friday I was just saying it. Let's see. That last weekly vertical crossover was on Friday the 29th of March. And again, going into our 4th week of decent and strong down movement. So again, on that 2-day chart, we see that we've got a strong down candle, and we'll be redrawing that trend line. Derivative oscillator still losing downward momentum, but that price percent oscillator heading down quite nicely. Lastly, we go to the 4-hour chart. What's happening? Crossing over again. We saw that happen in the afternoon, moving down. Now, it's sort of weird. It was because there was so much energy going down, even though there was a green candle afterwards, a bit of a pullback, so much energy in the oscillator that it actually drove the price percent oscillator over, even though there was a pullback. So again, if you've not already jumped into this trade, we did on a practice trade all the way back when that initial crossover occurred, and we jumped in on the 4-hour chart. And don't forget, once you use the 4-hour chart as a trigger to jump into a trade, then of course you back off and follow your 2-day and your weekly to tell you whether or not to stay in. So you just don't get jerked around by that 4-hour chart, moving in and out, because it moves, of course, so much quicker. It's a much smaller wave. And again, the bigger waves tell you how much momentum you have behind the move. So that's where we are, folks. Again, we'll continue to follow these charts. I got one more day left in this week. We so appreciate you being with us. If you've not purchased our book, we have our ninth printing available for you right now. Autographed copy sitting there at the office, ready to go out for you. All you have to do is follow the link in the show notes. Whether you're listening on iTunes, YouTube, you're getting our daily market reviews, look in the show notes. You'll see a link to purchase our book. If you happen to live outside the United States, and I know we have a lot of fans all over, we will ship your book to you overseas, but the way you've got to order it is, for some reason, Square does not allow us to take money, foreign credit cards. So all you got to do is email us, cw@chartingwealth.com, CW like charting wealth, cw@chartingwealth.com. Email us. We'll send you an invoice from PayPal, pay that, and we'll ship your book right off to you. We've sent out many, many of them. And again, you want to support us on Patreon, all sorts of special training for our Patreon members there at any of the 3 levels that are available. Of course, we've got our monthly Q&A that we do with our Patreon members, live call-in. We've also got reviews of the charts they are interested in, stock and ETF charts, also special trainings dealing with our quarterly chart, special trainings on short chart training, special trainings also on Bitcoin and our special Bitcoin chart, which has a completely different indicator. And again, great stuff for you. So thank you so much, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters.